All right, the US House of Representatives just dropped their big, beautiful tax bill. And yes, it is big. We're talking over 400 pages of tax changes, updates, and for once, some actual good news for regular people, not just business owners. And as an IRS enrolled agent and financial planner, I've been digging into this bill so you don't have to. And today I'm going to break down exactly what's in and what's out. And I'll even share a few of my favorite parts so far. So let's start with the good news, and there's quite a bit. But first, if you like this content, don't forget to subscribe and smash that like button and leave me a comment. I read and respond to all of them, and yes, even the sarcastic ones too. So like I said, let's start with the good news first, and there is quite a bit. So here are the major provisions that made it into the bill. All right, here we are with the big, beautiful tax bill. And first up, the current individual income tax rates are being made permanent. And this is welcome news for tax planning stability. And there's still some details being hammered out about exactly when the 35% bracket becomes the 37% due to the inflation adjustments. But the framework stays intact, and all other brackets get a 2% upward inflation adjustment. The standard deduction is also being made permanent. Plus, we're getting a temporary additional increase of $1,500 for single filers and $1,000 for joint filers from 2025 through 2028. And I don't think anybody's going to be mad about a few more bucks back in your pocket. And for the households with kids, trust me, and I know kids are expensive. I've seen the costs of childcare out there. So the child tax credit is being permanently set at $2,000 per child. That's double the original $1,000 from 2017. But wait, there's more. There's also a temporary increase to $2,500 per child from 2025 through 2028, and that's an extra $500 per child for the next couple of years. And one of my personal favorite parts of this bill so far is the increased qualified business income deduction, which is going from 20% to 23% and being made permanent. And this is one of the largest deductions for small business owners, and will be a significant boost for the almost 35 million small businesses in the US. Next up, the estate and gift tax exemption is being permanently raised from about 13.99 million to 15 million after 2025 and tied to inflation adjustments moving forward. So for those with potentially large estates or closely held family businesses, this gives a little more flexibility with gifting and estate planning strategies. The alternative minimum tax, which is exactly what it sounds like, helps to ensure that wealthy taxpayers at least pay a minimum amount of tax, and the AMT exemption thresholds and phase-outs are being made permanent, which will help, again, with tax planning consistency across the years for those with higher income. And another potential win for the service industry workers in my hometown of Las Vegas and across the US is a new federal income tax deduction for qualified tips and overtime compensation through 2028. And the exemption, if enacted, would only apply to income tax and not payroll taxes. And another part of this bill that I really like is the enhanced standard deduction for up to an additional $4,000 per year for those age 65 plus through 2028, but phases out over certain incomes. And I'll share in a minute why I think this provision was included. And the bill will also make car loan interest deductible up to $10,000. And again, this will phase out for higher income earners. Another interesting provision in the bill introduces something called MAGA accounts. And before anyone jumps to any conclusions, this stands for Make Americans Growth Automatic. And these allow a $5,000 contribution for kids that grows tax-free and seems similar to a 529 plan except on the federal level instead of the state level. So, for business owners and real estate investors looking to optimize their tax strategy, 100% bonus depreciation is back and it can be a powerful tool. This provision allows investors to accelerate depreciation deductions on certain assets, reducing taxable income in the current year, or potentially allowing you to amend prior year's returns to take more depreciation. And the state and local tax deduction, or the SALT cap, has been a source of contention since the Tax Cuts and Jobs Act passed in 2017. But this go around, the SALT cap is being increased from $10,000 a year to $30,000 for couples married filing jointly. And this phases down for high income earners again. And this is a significant increase from the current $10,000 cap and will help out those of you in high tax states. All right, if you haven't figured it out already, this big beautiful bill is gonna be expensive. So let's see what didn't make the cut, because some things are gonna have to get cut to pay for some of these other things being proposed. And it shouldn't come really as a surprise to anyone, but in a major rollback of policies from the previous administration, the bill terminates or phases out numerous clean energy tax credits, including those for residential solar, new energy efficient homes, hydrogen production, and EV credits. And there's also going to be sharp limits on components sourced from what they're calling prohibited foreign entities. And a notable exception was that the no tax on Social Security benefits did not make it into the bill. And the reason why I think this is that the higher standard deduction for those over 65 is being offered as a compromise on this, which could still help reduce the taxability of Social Security benefits. And some other notable exclusions are that the bill specifically limits the tax benefits of itemized deductions, which could impact taxpayers over certain income thresholds. And finally, the newly started IRS Direct File tax filing program is being terminated as well. And there you have it. We've gone through this massive bill so you don't have to, all to keep you informed on ways to lower your tax bill. And remember, this is just the House version. There will likely be changes as it moves through the legislative process. And I'll be keeping an eye on those developments and I'll update you as things progress. If you found this information helpful, please give this video a thumbs up and share it with someone who needs to hear this news. Drop a comment below with any questions and let me know which one of these changes you're most excited about. And for personalized advice on how these changes might affect your specific situation, remember, nothing beats sitting down with a qualified tax professional or financial advisor. And I happen to be both. So grab some time with me below to learn how we can help you lower your taxes, invest smarter, and retire better. See you next time.